Welcome back to Power Lunch. Gold is all the rage lately as its performance just keeps going. A record high yesterday, although it's taking a bit of a breather today. We're nearly $3,000 an ounce. Yet one options trader thinks it's going higher still as trade wars stay center stage. He's looking for a substitute for the commodity itself, though. Let's get Tony Zhang in here to explain. He's the chief strategist at Options Play. I mean, Tony, gold's been working pretty well. Welcome.
Yeah, that's exactly right. The breakout here above that 2,800 double top is a pretty significant bullish signal here for gold. We've had multiple double top breakouts here throughout this last year and this year, and this is really what I believe will propel gold up to 3,000 and potentially even higher here, especially on the back of the tariff and trade wars that we continue to be in at the moment.
So we're showing a chart of Newmont Corporation. Would you also be playing this to the upside?
Yeah, I actually think Newmont represents one of the best ways to play the upside in gold here. Mining stocks generally represent a leveraged play on gold itself. And I think Newmont at the moment represents actually one of the best value plays within the metals and mining industry at the moment, trading at about 11 times forward earnings. It's trading at a discount relative to the industry, despite the fact that both growth and profitability metrics is actually exceeding the industry itself. You're looking at EPS growth that's north of 35%. You're looking at revenue growth that's in the 17–18%, which is nearly double what the industry median is, and it trades at a discount relative to the industry. So I think from that perspective, this is really something this is a stock that's undervalued, especially since net margins have recovered back from last year where they had a loss. Net margins have recovered north of 20% here right now, which is well ahead of the industry median as well. Yeah. So for those reasons, I think the stock is well undervalued.
So you're bullish on gold itself. You like Newmont for a play here. Anything else in the space or anything you'd stay away from?
You look at Barrick Gold, it's trading at a substantially higher valuation. So I think those are some of the ones that I would stay away from, and looking for more undervalued plays here, especially in this market environment of higher interest rates. I would prefer to look for value. On top of the technical breakout here for Newmont, you broke out above $44, which is an important resistance level, and it broke out while outperforming the S&P 500, which leads me to believe there's also some accumulation from an institutional perspective. So those are the things that I like here specifically about Newmont.
We're showing a rather complicated trade, an option trade that you're putting on, but would you also just recommend shares?
Absolutely. You absolutely can just outright buy the shares. But from my perspective, implied volatility on options are extremely elevated for Newmont Mining, about 98th percentile. And that's why I'm choosing to sell options here to take advantage of that elevated implied volatility. I'm going out to the March 28th weekly expiration, and I'm looking at selling an at-the-money put, a $46 put, and against that's buying back a $43 put. And what that does is it limits my total risk on this particular trade just to $185 per contract. I'm going to collect about $115 per contract on this type of structure, and this allows me to basically take a neutral to bullish view here on Newmont Mining. So even if the stock doesn't move from now to at the March 28th expiration, I can collect $115 per contract, which represents about 3% of the stock's value. So if you buy the shares and the stock doesn't move, you're not going to be able to make money on that trade.
Right. If it moves lower, all bets are off. But some ways to think about this potential continuation in the rally. Tony, thanks so much. Appreciate it today.
Thank you so much.
Tony Zhang. Over to you, Brian.